Appreciate you all joining us. Good afternoon to the folks on the East Coast and good morning to those on the West. My name is Brian Carney. I'm a Business Development Manager with the Entrust Group. I'm based in the Boston area where, of course, it's snowing today. Seems to be pretty much every day this winter, so we may have some folks that were unable to join us from the East Coast. But appreciate you taking the time to learn a little bit more about the Entrust Group and specifically on the topic of the Real Estate IRA. Today's presentation, as I said, is being recorded, but we also do give you the opportunity to interface during the presentation. If you've got questions, there should be a chat box to the left of your screen where you can enter any questions you've got. I will try to answer some of those during the presentation, and of course we'll leave some time for Q&A at the end. But also would encourage any of you to contact me offline if you've got very specific questions to your situation or just want to talk about things a little more in depth. My contact information, of course, is on our website, but my direct phone number is 781-569-5074. And again, my name is Brian Carney. I'm a Business Development Manager with the Entrust Group. Just in getting started here, as we do with all of our presentations, just going to start with a quick disclaimer. The Entrust Group, we are an IRA administrator at our core. We don't provide investment advice, nor do we endorse any products. As such, any information and materials in this presentation are for educational purposes only, and we do strongly encourage everybody who decides to or is considering moving forward with a self-directed IRA to consult with their attorneys, accountants, financial advisors, or other professionals before entering into any type of investment. Again, we're really providing the tool to enable this type of investment via an IRA, and do strongly encourage folks to confer with their professionals and advisors. So a bit about the Entrust Group before we jump into the presentation. Some background for those of you who are not very familiar with us. Entrust has been in business for a number of years. In fact, we've been doing this over 30 years. And as you can imagine, we have grown to one of the largest providers in the self-directed IRA industry. We've got over 15,000 client accounts, over $2 billion in client assets under administration, and we process anywhere from 12,000 to 16,000 individual transactions a month, which is, as you can imagine, quite a bit to process. And our clients tend to be rather active in their accounts and handling everything related to that. So. I talk about our size, but from your perspective, from any client's perspective, you're generally going to deal with one or two people in working with the Entrust Group. We've got a knowledgeable staff that all who are eligible have earned the CISP designation, which is Certified IRA Services Professional. And as such, our business development managers and a lot of our service folks in earning that designation really have a high level of expertise in IRAs and what can and can't be done. Now, working with the Entrust Group, we do have regional offices throughout the country. As I mentioned earlier, I'm in the Boston area, and we've got in each time zone at least one office. And really that's designed for ease of use and communication with our clients. You're going to be calling someone that's operating on the same time of day as you, and generally are able to build a rapport with that person. So if it's myself or one of my colleagues, we'll get to understand what you're trying to accomplish, and and really tailor our message accordingly and help you through the process. Is really our intent to make it a better experience, as opposed to some other providers out there where you're calling a centralized 800 number and probably speaking with someone different every time. So the Entrust Group really focuses on education, as most of you I'm sure have seen in signing up for this webinar. We've got an extensive learning center on our website that we encourage people to spend some time on after they've selected the type of investment they want to move forward with. We do national continuing education programs where we're helping provide CE credits for financial advisors and CPAs and other professionals. And of course, as you're all experiencing right now, we do quite a bit of live events, both in person as well as webinars. And the webinars, again, are archived on the Learning Center of our website for future viewing and reference. Now, today we're obviously going to focus the discussion on investing in real estate using an IRA. And the specific agenda, want to give a bit of a background on real estate IRAs, talk about some of the benefits of using an IRA to invest in real estate, the various types of options and forms that can take. Critical part of the presentation is going to be discussing rules and regulations and funding methods in terms of how to actually get the piece of real estate or real estate investment funded and purchased. Go through a few sample transactions so you have a better idea of how things work in practice. Talk about the steps in terms of getting started and establishing an account and moving forward with this type of investment. And then, as I mentioned, I'll open it up to Q&A and spend a few minutes going through your individual questions and answering to the best of my ability. A bit of a background on real estate IRAs. Of course, as the name implies, it is really any IRA that invests in real estate. Standard IRS rules apply to all IRAs, self-directed or not, a real estate IRA or not. So we do need to still follow all the IRS guidelines that govern these types of retirement plans. But it is important to know that really any type of real estate is eligible for inclusion in an IRA as long as you're following the right guidelines. IRA options that we can offer administration services on, of course, takes the form of a traditional and a Roth IRA for personal. We do some small business IRA plans, SEP and simple IRAs, and we actually also have individual 401k capability for those of you that are self-employed. And we also handle HSAs, health savings accounts, as a pretty popular type of account for our clients as well. All of these different types of IRAs are going to enable the same types of investments, really alternative assets, and in this case specifically real estate investments. In terms of benefits to using an IRA to invest in real estate, really break it down to three simple ones. The first is control. Of course, it enables you to make your own investment decisions and choices, invest in what you know and understand. In the case of real estate for a lot of folks, they have done various types of real estate investments in the past. It's something they're comfortable with. Of course, real estate is tangible and isn't like a stock that could potentially go to zero overnight if something went wrong with the company. Generally there's an inherent value to property. But beyond giving you the control, of course, this offers you a diversification opportunity. Generally speaking, property prices don't move in correlation with the equity markets or bond markets. And really, the diversification will allow you to mitigate some risk in your portfolio and potentially bring down volatility if that's what you're seeking. And of course, the obvious thing of any type of investment with an IRA is going to be the tax benefits. Contributions may be tax deductible, and earnings are generally going to grow tax deferred or tax free in the case of a Roth IRA. Now, while there are a lot of rules that govern self-directed IRAs, the manner in which you invest in real estate is generally not one of them. They can take many forms: residential, commercial, offshore real estate investments, mobile homes, some clients buying storage units. That's a pretty popular type of investment. Or aside from physically owning all or a portion of a property, some of our clients are investing in partnerships and joint ventures or private real estate investment trusts or REITs. But of course, there's even more things beyond this. But for sake of brevity, these are certainly some of the most common types of investments our clients are making. Now, in the last slide, of course, I alluded to rules and regulations governing self-directed IRAs and real estate IRAs. And these are really important things to understand in entering into any type of of investment of this sort. There's things called prohibited transactions and disqualified persons. Prohibited transactions are outlined in Internal Revenue Code 4975C1, which I'm sure everyone is very familiar with. But it is very important to understand this before entering into a real estate investment from your IRA. It talks about things like arm's length transactions and self-dealing that are, of course, prohibited. Basically meaning if you own a piece of real estate currently, you're not allowed to buy that from yourself using your IRA is a key thing to consider there. But also transactions between an IRA and a disqualified person is prohibited by law. And disqualified persons, as the bullet points show there, are outlined by Internal Revenue Code 4975E2. And basically speaking, that's going to be lineal family members, parents, grandparents, children, grandchildren, and their respective spouses. But if that's a topic that anyone wants to discuss further, we've got multiple pieces and additional information I can provide on prohibited transactions and disqualified persons. Those are really critical things to understand in terms of getting into this type of investment. Now, funding the actual purchase of real estate can be done multiple ways using an IRA. And some of the most common, which I'm going to highlight in the presentation today, are a direct purchase or a cash purchase from the IRA actually buying the property. A lot of our clients are partnering with other individuals or other IRAs to make a purchase. We've got quite a few clients that are investing in LLCs or single-member LLCs, which gives them a bit of additional control in affecting transactions and paying debtors and so forth. And finally, debt financing, or what's known as a non-recourse loan. We'll talk a little bit further about that as well. So the first funding option, a direct purchase. And I think this is often thought of as the simplest and quickest way to purchase real estate using an IRA. And basically it's using liquid assets or cash that's held in the IRA. Now just as an example of how this would work in actual operation, IRA purchasing a rental property on Cape Cod. Vesting, what's referred to as the vesting, is actually the title of the IRA. And that title is going to be used in the place of in all documents in place of your actual name. So the purchaser of the property would be seen as the Entrust Group, Inc., for benefit of John Smith IRA, account number 12345, or whatever your obviously name and account number are. That's going to be how the property is titled. That's the name on the deed. That's reflected in all of the contracts in purchasing and selling the property. And in terms of getting things affected, our real estate department here at Entrust will actually sign all paperwork on behalf of your account. We'll need you to sign read and approved on the paperwork, basically authorizing us to act on your behalf. And in that scenario, all rents collected or profits coming out of the piece of property and expenses that need to be paid for the property need to flow in and out of the IRA directly. Of course, as with any type of real estate investment from an IRA, you can't personally use the property. You can't stay there on vacation, unfortunately, and you can't provide sweat equity. So going down there and painting the kitchen or refinishing the floors yourself is just not allowed. Of course, you're allowed to hire contractors to do that work on behalf of the account, and those folks would be paid right out of undirected cash in your IRA. The second option I mentioned is partnering. An IRA, a self-directed IRA, can partner with another IRA, can partner with your own non-IRA money, or take on an unrelated partner, be it IRAs or someone investing in cash. And of course, as you'd imagine, the ownership is proportionate to the investment percentage that each partner is contributing, both in paying for the property, but also in how the income will be distributed. So it's important to really understand that everything's going to work in a pro rata manner in that respect. So an example on this is husband and wife's IRAs that are actually purchasing a rental property in Northampton, Massachusetts, out in the western part of Massachusetts here. There's quite a few colleges, universities out there. And in this scenario, a husband and wife are partnering. And it's important to note that this is only allowed for people that are ordinarily considered disqualified persons, as we discussed earlier. They actually are allowed to partner at the time of purchase only, and that's a really critical thing. So you don't want to have a husband's IRA purchase a property and then the wife buys in after the fact. That is not allowed. But if it's done initially at the outset of the purchase, it actually is. So for purposes of this example, each IRA is investing 50% of the purchase price, and the title or the deed is held in the names of the IRA. So the Entrust Group, Inc., for benefit of John Smith IRA, followed by account number, and the Entrust Group, Inc., for benefit of Jane Smith IRA, followed by account number. In that scenario, each IRA has 50% of the ownership stake, and as such will receive 50% of any rental income, or if the property is ever sold, proceeds from that investment or proceeds from that sale, and also would be responsible equally for any expenses, be it property taxes, someone to mow the lawn, or paint the bedrooms, as I mentioned earlier. Now, an important factor related to disqualified persons, the daughter of these folks would not be able to be a tenant, would not be able to rent because she is, again, a disqualified person and can't do business with her parents' IRAs. The third option for funding a real estate investment through an IRA, and what's getting to be, at least in my experience, one of the more common ways because of the options that it gives and the flexibility, is a single member LLC. And in this scenario, the IRA invests in an LLC, basically by acquiring its member shares. So a client will create a new LLC, the member of which is their IRA. The IRA funds that LLC. So basically the money is sent from their account with Entrust or another self-directed IRA provider and sent to a business checking account that's established for that LLC. And in turn, the property is purchased by the LLC. So we're not involved directly in the real estate transaction per se, but your IRA is still funding the purchase. And really the advantage to this is affords the quote-unquote checkbook control, as many of you have probably heard about. The IRA owner really has the ability to control or help control the transaction. Immediate access to the funds makes investing easier in many ways. Generally could be savings on administrative fees, and of course, as an LLC, limited liability corporation name implies, there are some additional protections from claims that are received through going that route. Now, disadvantages, of course, there's generally a cost to create an LLC. Most clients will be working with an attorney or a CPA to help them establish that, to draft the operating agreement that governs the LLC. And also, many states will have additional taxes and filing requirements. I know here in Massachusetts, it's $500 a year to maintain an LLC. That varies state to state. I've seen it as low as $20 a year and as high as $1,000, I think. So certainly something to be aware of and look into before entering that type of arrangement. Now, the fourth funding option that I'd mentioned is debt financing, something called a non-recourse loan. So in the case where an IRA owner doesn't have enough money in the account to fully fund a purchase and maybe doesn't want to partner with another individual or themselves with non-IRA money, in that scenario, you can seek financing or effectively use leverage on the account. However, it's not a traditional mortgage that you would seek, and generally not a primary lending institution, if you will, that is going to offer that type of mortgage or that type of loan. The non-recourse loan, as the name implies, it means there's no recourse against the individual. So in the case of default, the lender can only seek a claim to the property and not the IRA's other assets or the IRA owner's other assets. So As you can imagine, that tends to make these a bit more difficult to get. Generally, non-recourse lenders are looking for a much higher amount of equity in the property. So instead of the typical 20% that people put down for their primary home mortgage, most of these folks are looking for 40 to 60% or sometimes even more of equity in the property. And as the last bullet point there mentions, UBIT, unrelated business income tax, may apply. And that's something to absolutely look into before entering that type of arrangement. UBIT, of course, in adding taxation to an otherwise tax-deferred account, isn't appealing to a lot of folks. And really what happens with UBIT is the borrowed money, the earnings from the borrowed money is taxed. So we can talk offline if people are interested in that route and want some more information. I'm happy to speak further. So those are really the four, I guess, most common methods for some sort of a direct ownership in real estate, aside from what I mentioned earlier with private equity and and those types of pooled investments. Things we just discussed, I think, are certainly the most common ways to invest in real estate using an IRA. And in order to do so, of course, you would need to establish a self-directed IRA with us or another self-directed IRA provider. Getting an account established is pretty easy. Generally, just have you fill out a couple forms and submit that to us, along with a copy of your ID, a government-issued ID. And usually it takes 2 to 3 days for us to establish an account. At that point, we would seek to get that account funded, and that can be done in a variety of manners. Of course, you can make your annual IRA contribution. You can do a transfer from an IRA you've got elsewhere, another provider. Or you can do a rollover from a previous employer's plan, 401k plan or 403b or things of that nature. Now beyond that, with respect to 401ks and that type of employer-sponsored retirement plans, some plans do allow what's referred to as an in-service distribution. I wouldn't say it's common, but something to, if that's of interest in you in funding an account of this type, speak with your HR department or the actual provider of the 401k plan to find out whether or not that's a possibility to move money out of a plan where you're actually still working. Once the money is here, really talk to us about the manner in which you'll be making the real estate purchase, how things are going to be structured, and myself or one of the other business development managers will guide you through the process and the paperwork and help you direct that actual purchase. Now, a bit of a sweetener, if you will, to getting things moving sooner than later if you're interested in this type of investment. Entrust is offering a promotion now through the end of tax season, April 15th. So basically for the next 2 months, we're offering waiving the account establishment fees, which are ordinarily $50. We're going to waive those if you submit new account paperwork to us and also fill out paperwork to begin the process of transferring money or rolling money into your account. So a bit of an advantage there if it helps you get motivated to get started. Certainly happy to provide a copy of that coupon to you after this presentation. Now, I've talked about a lot, of course, in this presentation. Different types of options to invest in real estate, different types of IRAs, funding options as we obviously went more in depth in terms of doing a direct purchase, partnering, an LLC or single member LLC investment, debt financing via a non-recourse loan. And just a few key things to take away here. Due diligence is critical, of course, with any type of investment. Basically, need to do your homework before entering into any sort of arrangement or purchase of this type. The more information you get, the better. So I think clearly all of you are demonstrating the desire to do due diligence by just attending this webinar, doing your homework, and before moving into this type of investment. Clearly, you want to work with a reputable and experienced IRA administrator. I do strongly feel that Entrust is one of those. We've, as I mentioned at the beginning, been in business a long time. We've got a lot of assets under administration. We've got a lot of really sharp professionals that work for the firm and are really focused on customer service. I think having a knowledgeable realtor and title company and working with other knowledgeable professionals is always critical, especially in the real estate market. You want to be sure that titling of the asset and the property is correct, of course, so with a direct purchase that it's titled in the name of your account, or if it's purchased through an LLC that it's titled in that name. And property management is certainly something to consider because of the rules that prevent providing sweat equity to a property. You can't mow the lawn or do things of that nature. Having a property manager really can eliminate a lot of the headaches that come with this type of investment and property ownership. Having them take control of the cash flow in and out and all the services that need to be provided on a regular basis. So with that, I'm going to open it up to questions. I haven't really had many come in during the presentation. So if you do have questions, just as a reminder, feel free to type them in at the bottom left, I believe, of your screen. I will address those as they come in. Or, again, if you're more comfortable in having a one-on-one conversation and talking about your particular situation, I'm happy to do that as well. And I can be reached by phone directly at 781-569-5074 or via email. My email address is bkearney, BKEARNEY, at theentrustgroup.com. And finally, you could also contact me through our website, which, again, I think you've all gotten familiarity in just registering for this webinar. A couple of questions have come in the last moment or two. Let me just read through these here. What happens if there's not enough cash to cover expenses at some point? I take it the nature of that question is covering expenses to maintain the property after the purchase has been made. If there's not cash available either in the LLC's bank account or in your IRA at Entrust in the undirected cash. There's a few options there. Of course, that is the first place we generally would have you look is undirected cash in your account. But if there isn't any, you've got some options. You can make your annual IRA contribution if you haven't done so already. So send in a check or wire money in to provide additional funding for your account. Or you can do an additional transfer from an IRA elsewhere, or an additional rollover, if possible, from a previous employer plan. So some options there. And of course, hopefully this property that's owned by the IRA is generating some income. So rental income can be used to pay expenses as well. I hope that answers the question. Question regarding property managers. Do you know of property managers who are familiar with dealing with self-directed IRAs? I would say quite a few, if not most, property managers should have a level of familiarity with self-directed IRAs, and if not, it's a pretty easy conversation to get them up to speed on things, and one that I'm happy to hold. Basically, they will enter into a contract either with the IRA directly or the IRA owner or LLC owner. For their services. They provide those services and will generally take a percentage of income that's coming in from the property as compensation. Got a follow-up question from someone regarding paying expenses from the account if none of those options are available to provide additional cash. So if you can't make a contribution for the year, you can't do a transfer or a rollover. Well, unfortunately, at that point, I guess I'd say your options are fairly limited if it's not possible to get more money into the account. I'd say in that case, probably the most logical option would be to consider selling the property and to recoup that money and go from there. But again, that's a very specific situation that I'm happy to speak with that person offline, and address further, and maybe there's something I'm not understanding there. Got a question regarding offshore real estate investments and taking property out of the IRA. Who would buy it, and are we considered disqualified? Depends on how things are structured, quite frankly. If the offshore purchase, or any real estate purchase for that matter, is made with a Roth IRA, you can always take the property as a distribution. If you're of a qualified age, 59.5 or greater, you can actually take a distribution of the property. It's basically a lump sum distribution. You re-register the deed in your name. And in the case of a Roth IRA, that's actually should be a tax-free transaction. In the case of a traditional IRA, though, if you were to take a lump sum distribution like that, it would be a taxable event. Basically, that money would be seen as ordinary income, the value of the property. So it could be a pretty large tax bill that you're facing in that scenario. So, again, happy to talk a little bit further about that situation offline if someone's got specific questions to their situation. Another follow-up question pertaining to additional funding if none of those monies asked about earlier is not available. If there's a partner in the LLC, then sure, they can put in additional funds. But generally speaking, when there's additional capital provided to an LLC, you're going to want to have each member allocate additional money in a pro rata manner. So if it's a 50-50 ownership split, then each would want to provide additional funding to that level. But again, this is a very specific situation, it seems, that one of our participants is in. So please give me a call and we can discuss that further offline. We've got another follow-up question regarding determining taxes that are owed. How is the value determined of a property when it's sold? In the case of a distribution via a traditional IRA, you would need to get an appraisal on the property in order to determine a true valuation, if that's the intent. So that could cost a bit of money actually getting the appraisal done, but that would provide us with a proper third-party valuation of the property, and in turn we use that number in doing our tax reporting to the IRS. So I hope that answers that question. But want to wrap things up. I want to be respectful of everyone's time. I appreciate what you did spend joining us this afternoon or this morning, depending on where you're calling from. Hope you found it to be time well spent, educational. And again, I'm happy to have offline conversations over the phone or via email. My contact information here is up on the screen. Again, I'm a business development manager with the Entrust group, responsible for the Eastern Time Zone, based in the Boston area, and can be reached at 781-569-5074, or the email address listed there, or again via our website. You should be able to track me down quite easily. So thank you all very much for your time, attention, great questions, and have a great day. Take care.